check, mic check. Happy Friday. What's going on, everyone? This is Jordan with Conquer Trading and Investing. Getting ready here for our public live stream with a Friday flavor, a Friday vibe. I'm looking forward to it. Closing into this long holiday weekend, making sure that we have the clarity we need to make sure that we have. Did you notice that people are a little frothy out there? Oh, man, that really just inspires me to go ahead and lay it out and help everyone. Today, we're going to have a price action focus, taking a look in this bear market, what's transpiring. We're seeing right now, today, this morning, a very good, on the surface, jobs number. There are things you could dissect in there, no question about that. But on the surface, very strong number. And people that really have, at this particular point in time, embraced the bear case must be wondering, well, what's going on? Doesn't that give the Fed enough reason to continue on pace? Well, does it? I mean, do you think that warrants on face value a 75 basis point rate hike coming up in September? I don't know, to be honest, and you all know because we make sure here each and every day to continue laying it out. I personally believe that we're looking at the CPI coming up on the 13th of September. This is going to be the one that the market is going to go ahead and price in what type of degree of rate hike is coming up. And I think it's going to have to be a strong number in order to go ahead and push the odds towards a 75 basis point hike. We will see. September historically is a very bearish month. This is seasonally a month that you could expect a lot of volatility, and I think that it would make a lot of sense. I think I'm just wondering what happened over here on my trend line. Oh, there we go. I was wondering, by the way, I want you to focus in on this. Why is my trend line not like this? Why am I looking at a trend line that I'm seeing price peaking up above it? So the first thing I do is I check, well, is it because, like, am I off log scale? Should it be on log scale? And what's happening over here, though, is even though price has gone ahead and peaked above this trend line, you could see the trend line was originally started off of connecting these 2 points over here. And then I kept it there even though price went ahead and broke above, because on the way down, it went ahead and it tested that area and it held as resistance. So you can see resistance. Market's still paying attention to that line. We did have a breakout. We watched this was actually pre-Jackson Hole, and the market was not able to go ahead and hold that. We were also watching at that particular point in time. We were watching on that breakout, this level right over here. That was the pre-CPI print of August. And as long as market held above that, we figured that, well, technically, structurally, this breakout might have the potential to take hold. It didn't. It broke below there on Powell's speech last Friday, and then extended down far. Now, I don't know that that was the best way to execute. You know, I could say that, well, coming off the bottom, we did a very good job positioning early. You hear a lot of people, or I hear a lot of analysts talking about how people flipped at the top. Well, I could say, no, we actually flipped at the bottom. This was bad too. I'm talking about some bad execution over here, and that's how we're going to learn. That's how you learn you learn most of all from your mistakes. Now, at the same time, when you do things well and you do things right, you could spend time also just briefly reviewing that. That's just as important. But you learn a lot from your mistakes. And one of those mistakes that was made this year was, first of all, very, very good being able to go ahead and see, or let's say, be preemptive of the rally off of the March FOMC, the buy the invasion type news. And then what was bad was waiting for that rally to be fully faded, waiting for the load to be taken out in order to go ahead and regain that short bias. Obviously, it would have been much better. Look, the degree, how fast this rally really unfolded caught me by surprise. I was expecting it to actually, expectations and bias. There you go. This is great. This is one of the things that really, let's say, caused me to really be self-reflective and understand that I had more work to do in losing my bias, and it's paid off. It's paid dividends. The only way you get there is, again, it's by continually looking to work, to focus in on your weaknesses, and to go ahead and try to improve them. One of the things that caught me off guard was not so much the rally. I was expecting the rally. It was the fact that the rally didn't go or last a little longer, I should say. That it didn't go a touch high. I thought it was going to go into resistance over here, and I thought it was going to come off a little bit further. And those type of expectations will get you killed, really. And get killed, I mean, I say that tongue in cheek, but there was a lot to capitalize off of over here. A trend line, and going ahead and by the way, great morning, CTM. Thanks for being here this morning. Rodrigo, everyone, Luke, Fabio, great to see you all here as we get going on this Friday session. And I'm looking forward to making it a good one. If we're getting up to make sure that we put the work in and that we perform. Could have done a better job, however, it looked like, in seeing this rally fade. And then not only, here's a perfect indication. You ready? Let me come on the daily time frame, but that's okay, right? Like when we came back down over here and then we resumed out, first of all, we could have easily have drawn this trend line connecting to that high, but better than that, when price didn't make the higher high and it didn't resume higher, that would have been a very early indication when you took out that low that we are rolling over. That would have been a good time if you weren't looking to attack, at the very least, to say, well, this rip that's taking place, it possibly could be rolling over. Again, all as I did during this time over here, like calling it as it is, we did very good in setting up the rally. And then over here, I put out on the YouTube something about like, what's the name of the video when the stock market DOMS crashes, and just pointing out this level over here, that March low, and that if that broke, that would signal another big leg down, which it did. You had the breakdown again, then a retest, a perfect retest of that line, and then another leg down, and we did good again in like people here were real. It was really fear. There was massive fear in the markets. We started focusing in on, because the inflation was so hot and the Fed was tightening. This is when it was embraced largely by all market participants that, listen, the Fed is the market's going down because the Fed is tightening because of inflation. So, okay, because of inflation, what's causing the inflation? Well, food and energy is really causing, the recent month-over-month prints, high inflation. All right, and then we saw food-related commodities coming off 20, 30%, crude oil coming off 30%. All right, well, it seems that we might be looking at peak inflation, that 9.1 print. That was it. We watched price action that day. Do you remember here on the Bitcoin, right? What we saw was this. We had this trend line like that, and that morning, price broke below it, and then faded up. That's when you have a print like a hot CPI print, 9.1 in the free world, that's insane. Yeah, it's insane. But what the market showed us was that even though there was such a hot print and every reason and expectation for this to roll over, do you remember people were at that point expecting new lows? And by the way, new lows could come at any point in time. We are entering September. A lot of people are prepared for it, but we don't want to, we want to be prepared for everything on both sides. We just don't want to lean in and have some type of bias, and that type of bias could get people in a lot of trouble, because although Bitcoin didn't really do much during the month of June into August, it really didn't do much at all. It was just this really slow, grueling, let's say, uptrend that didn't, for myself, really equate to putting up any sizable profits at all. Right now, Ethereum did, fortunately, but not Bitcoin. But Bitcoin over here, it really was a huge tell when you had that high impact news event, that hot CPI, and then price action that morning faded it. It had a trend line break, every reason to go ahead and test the yearly low, the June low, and instead it ripped upwards, and that was beautiful. And then you could see what that looked like from this view over here. Let's come back to June, right? There it is. And then shortly after, we had a little bit of profits. I don't know. That was, a little 5% or whatever it was, but whatever. But that led us to be able to say, all right, well, here we go. We got the green birds, flipping off, and we're going to go ahead and we're going to be executing on the upside. And again, no profits were able to be like put together, anything sizable, but we were on the right side. And that's what's important. And a lot of people who held bias, not following price action had a huge tell over here, right? All those they were doing was they continued doing what had been working the last 3 or 4 months, and that was selling any rally. So they were selling over here, right? They were selling this whole way up. And that's why, as price then over here started falling off, they like people with that bearish bias got very euphoric, right? They like, you could see it from that's where Twitter excels in really showing market sentiment. And like people who for the last 6 weeks had been on the wrong side of the trade, all of a sudden, finally price falling in their favor, they became emotional, right? All we did is we just took a position. There was no emotional about it. And this position wound up and still is holding nicely into favor, into profit, right? That one is looking at right now, still this morning, and not yet getting ready for any type of exit signal, still positioning short, still holding a 13% open position. It's not bad. Again, there's just been no follow through on the Bitcoin. It's different with Ethereum. Ethereum is getting ready for an exit this morning in just a couple of hours, 2 hours and 27 minutes will be the next signal period. And why that's holding a nice short position, not as nice as Bitcoin's. Let me take a sip of the coffee. I don't have any matcha with me here this morning, but my throat was getting a little dry over there. And on the upside, Ethereum was outperforming. We were able to put together a beautiful trade off of some beautiful trades on the short side, right? Really beautiful into the end of June. That was on both Bitcoin and Ethereum. And then also here, another beautiful one on Ethereum. Ethereum has just been really so tradable, so beautiful. And on this downside we were looking at yesterday, looking at the Ethereum Bitcoin cross. Is this a little bit indicative of maybe a risk on move setting itself up? And it could be. And even though we're able to put those pieces together, it's not like I'm going to discretionary exit a trade. I'm not doing that whatsoever. But what I am getting at is that we are seeing on the downside, we're seeing Bitcoin outperform, and Bitcoin currently holding a position 13% in profit, while Ethereum is giving up those profits on the upside very quickly. This is now only 6-7% in profit and getting ready to exit. But I'll take it. Again, I'm not worried. I'm not trying to on any individual trade, trying to make that the trade, right? To be honest, after coming off a 52% gain, I'm even surprised if it put up another profitable trade. And I mean, it looks like as we're getting ready to exit here in just 2 hours that it is a profitable trade. But at the same time, or maybe not, this might not exit. This might hold. We still got 2 hours of price action. This is flipping back and forth at the moment to whether or not, there you go. You see it right there. It just flipped back to short pending now. So I have no idea. 2 hours is a lot of time. I have no idea what's going to be happening in 2 hours, whether or not this one holds on for another signal period or exits or whatever. But you could see by my tone, I don't really care. And that's awesome. That's the beauty. And that's where you want to be, in the driver's seat. We do have strong jobs numbers today, and I don't think that is going to influence the Fed one way or another. I think that it all comes down to the CPI. Don't forget, we have Labor Day on Monday. We won't be streaming here on Monday together. We'll pick it back up on Tuesday. It is a bank holiday in the U.S., and the markets will be a little bit subdued. I hope that any of you that are in the States, that you got to really to spend some beautiful time with family and friends, and maybe even barbecuing. You know what foreigners love about Americans? Their barbecues. They really do. That's so cool. So we won't be here on Monday, but then you have people coming back really to the office, and then like, you know, people really very quickly, there'll be some repositioning going on early in the week, but people are really going to be very quickly waiting here for the CPI, because that in this data dependent market that we're in, this is really what is going to either we're going to see. We're going to see very quickly on that day the odds of a 50 or 75 basis point hike really priced in one way or the other. And again, if it comes in as per expectations, that just leaves the market guessing. That's the best situation for the Fed, by the way, to have the market guessing and not be able to front run one way or the other. And on this Friday here of this light volume week, there's not much else to say. You can't really read too much into today's price action. We had some clues along the way. Some of those clues were, again, Ethereum, Bitcoin. But here's a nice break. I mean, that is showing me that, okay, well, the markets are actually moving a little towards risk. We talked about that yesterday, and then we see a little bit of a follow through today. Look, I know it's an ugly picture out there when, expectations are through the rest of the year that the Fed is going to be out there continuing to tighten, right? Now, what that looks like matters. Oh, by the way, we have the ECB next week. That's a big deal. That's something that that could move markets, right? I believe expectations, are for a 50 basis point rate hike. I think that the possibility of a 75 basis point hike has been thrown out there. I'm not sure which way they're leaning. It's quite also interesting. You have to look at the calendar over here that Powell is getting ready to speak right after the ECB press conference. That's interesting. And you often see if a central bank kind of makes a mistake, in quotes, that right, you usually have Fed speakers out right afterwards just in case they need to kind of like, you know, even though we just did this, we didn't mean to do that type thing. That happens very often. So we'll see what happens. That should be explosive. And how that's going to work out and for the DXY. And I just like, I kind of feel, first of all, this is how I feel. And this is, take that for a grain of salt. Right. But so we did Hunter. Sorry, I don't know if that's relevant. Let me start with oil, right? And the bombing in Syria that happened days ago, though. Did more bombing happen? Yeah, I don't know how relevant that is, but that happened a few days ago, 3 or 4 days ago. I'm not really sure. Juan, if you get an exit signal, that has to happen only on the bar close. Juan, it does not. It had no, and that does not at all in any way, shape, or form mean that a long is triggering. Absolutely not. There's different criteria for both sides, Juan. No, yeah. So first of all, you have to wait for the bar close for confirmation, and that does not equate to flipping long. Rico Fung, great to see you. I mean, bullish whiz. Let me get back to the markets. I mean, to the indexes. So, and it was triggered by this thought over here, right? I'd rather the job market comes out weak. And I suppose you're saying, well, if the job market comes out weak, then there's more of a chance of the Fed being softer, in as much as coming from a 75 basis point hike, 75 basis point hike, and then coming to a 50 basis point hike. And you know why that's, I suppose, welcomed. You also have to look at the market, and the way that I see the market is that right now we have every opportunity to. This is looking at a view that's counter, right? When I say counter, this is looking at a bullish pattern that potentially is developing. It's very clear. First of all, the trend line is the most important, and really head and shoulders, inverse head and shoulders, and everything else is meaningless. Not meaningless. There's not. I'm sorry, that's wrong. There's something about this type of structure that takes place in the market where you have a low and then a lower low, right? The head and shoulder, the low, and then put in a higher low, right? because there are people, right? I'm first going to give the bullish side and then I'm going to give the bearish, because to be honest, I have no idea what happens next. I am equally open to the possibility and potential that June is the structural low and that we are going to see that hold as the low. I am also equally as open to that as soon as this month here that we could actually take out that low. And I really honestly believe that a big part of that is going to come from the next week's CPI or the week after CPI. So we'll see. But at the end of the day, we are following price. It's nice to have expectations. It's important to put all together all the pieces. And when you have a very sharp understanding of the macro and then able to go ahead and, sprinkle on that TA around it, that's really when you're setting yourself up for some good success. And as good as you are at both of those, they are both meaningless without any type of strong risk management. We did speak about risk management yesterday, and we'll be speaking about it a lot next week and in the weeks ahead. But here we're focusing a little bit more on just price action. On the upside over here, I could see or make the case that potentially, and this is not like any type of forecast, but you could see that, yeah, I could see a inverse head and shoulders developing. And, what all that matters is this line break above this trend line, and then potentially it's on. And all that we've seen so far, by the way, is we've seen price go ahead and focus in this area over here, right? This is the resistance. After it broke that, it came in for a retest and resumed up, and then came into resistance, right? And from that resistance, and then off of the back of some very hawkishness posturing from Fed Chairman Powell, you had this resistance holds and then resume down into support. And that's that support that was firmed up over here on that resistance and then confirmed. So we're kind of neutral from my perspective. Not only are we neutral, we're waiting on, in a data-dependent market, data. And that's really where we are. What happens on the downside? That's equally as important to the upside. Are we looking at, my eye is only over here, trying to touch that, and then on to the second one. So let me get rid of the smiley faces over here, and this more. The green's fine. Maybe I'll make this one yellow just to differentiate one between resistance and support. And, I don't know if this line warrants even being down below her, given that bubble of support, but I guess it's important to be safe. And yeah, that's a very clear indication we can get rid of this stuff. This is gone. I need to just keep this simple now. These are the only two lines that matter for me right now. We're no man's in between, a breakdown. If we come up higher into this resistance and then break down, then you still have some support over you. This is really the attack zone will be price breaking below this area. And then at that point, we have every reason and every opportunity to go ahead and make another leg down and nearly lows. And that's a huge tell to find out what kind of desire there is to bring this lower. Obviously, we know the sentiment out there has two things. First of all, entered back into fear. And the other thing is that it's wildly bearish right now. So under those conditions, we could make a very big leg down. And then at that point, I think that, the Bears will be in pretty strong control. Pretty strong control. And that's that. That's a very good look at what's ahead. With the dollar, the DXY, I just want to point out that, again, very few, not that I don't mean to be blanketing out there, everyone. There's a lot of people who have done a fantastic job. By the way, yesterday I was talking about, I don't know how many people were able in October, November to go ahead and understanding the macro, talk about that. Listen, that like you should really be exiting all risk assets right now and getting very defensive. And then a couple of people were pointed out that we're on the right side. I think I'm going to get the names wrong, maybe. Cowan, Kakown, and someone else. I made a note of them though. It was important. That type of stuff is excellent, and thank you for letting me know. I'm genuinely always interested, especially in having this type of like vantage points, specifically of those who have a history of getting it correct, right? You want to consult all sides, right? At all times. I was thinking yesterday, someone passed on to me this recent interview of Raoul Pal from Real Vision, who's doing like a Real Vision marketing thing on YouTube, and he's giving some of his thoughts in macro. And you know what? I have to say that I have a lot of respect in that Raul's trying to give always his opinion, real-time advice, whether it's right or wrong. At least he's giving real-time advice about how he sees things and where he sees things going in the future. He's putting it out there. A lot of the analysts that I see, they're kind of just assessing the current situation. So like right now, they're like, oh, the dollar is just like explosively strong. Yeah, thank you. I could look at the chart and see that. My little kid could look at the chart and see that as well. And they're like, Dad, that's straight up and to the right. But I don't need you to tell me that at the time. Like who was over here saying, all right, now we're resuming out. We're in a major uptrend, and now we're having a buy impulse out of that, right? Not only that, after this is to talk about price action. We looked at it on the CPI. This is always an important tell. And I failed over here. I was just kind of being showing off a little bit because we had that same posturing up over here. We're going to 120. There's nothing in the way. And then lining up a double black diamond impulse, the second one. The first one quickly was faded. The second one took off, and just being able to, but I missed this. Right? This was 2 days after coming back from mission trip, and that's fine also at the same time. But this is very important when you have a break below this trend line and then prices comes in for the retest and doesn't resume off, but goes ahead and is able to fade the break down. That over there, if you're smart, you're watching over here and you're like lining up that trend line, and on this breakout, now you're going back towards the trend. But the truth is, you did not have people posturing over here how strong the dollar was until you came back up and took out the high. That's not the type of analyst I'm looking for. I try to actually get those people out of my feed because that's noise. It's like, the Captain Obvious analyst. Like, what does that do? I'm looking for the person that's going to provide value that, and by the way, this big shout out to CTM. This was Will CTM at the very time talking about the trend line break. Speaking of which, I gave a lot of look. My boy Powell was on the wrong side of the trade for a long time throughout 2020, and I gave him a lot of heat. Now is the time to do the opposite. And he was very, very clean and clear about pointing out this inverse head and shoulders move that took place on the dollar, right? And it was very tricky because you had a breakout. Here's the exact opposite of what we're talking about. Here's a breakout, and then he comes back down below. So that's a liquidity grab to the upside, and that got very difficult. This is kind of where I gave up on the trade myself, right? You had Will with the best entry, and that is the best entry. And then over here on the extension, it faded back down, retest and resume down. But you got to have the fortitude. I didn't in this case. You have to have the fortitude to continue to stick with it. It's at a very important junction. And then when it broke back above, breakout retest CTM all day long, right? That right there. And look, that resistance, that breakout above on that resumption, came back in and tested again, confirming it once again. You got to be strong. You got to be strong. You got to have that discipline. You got to have that fortitude. Yeah. So what I'm getting at is over here, you have, and I see it, a lot of people out there who kind of make it almost very difficult for people to hold contrary opinions. Well, I saw my boy Peter, Game of Trades, talking about using the MACD and showing that there is some type of bearish divergence picking up, and to keep an eye on it because that could lead to some type of correction and or more. And people are almost indignant. How could you be even talking about those things right now? The dollar's so strong. Europe and Japan are energy deficient. And well, who knows? But what's wrong with following what's happening on price? Again, title here of this session is price action trading. And yeah, you want to be aware of the fundamentals, but at the same time, you want to listen. At the end of the day, price doesn't lie. If I want to look at fundamentals, I could go to the oil market. And by the way, CTM Strong over here on this sell impulse not only nailed it, did a very good job holding it through. And every single analyst out there, and especially those who really make their living in the energy markets, could not understand it whatsoever. Because if you look at the physical side of the market, it's showing that there is shortages, and yet here we are, and price is price, right? So don't get caught up only in the fundamentals. You want to be able to consult the fundamentals. You want to be able to follow what's going. It keeps you sharp. And by the way, it's a huge passion of mine. But at the end of the day, price is price. All right. So we got a good session here today. I think that we're a little bit light on viewers because we are light on likes. A little bit light on viewers on this Friday here at the head of a long weekend. I wanted to make sure that I was here with all of you. If you are watching, please don't forget to smash the like button, CTM fam. Please go ahead and light it up. It does get me inspired. I appreciate the love. And most of all, it does really, truly help this channel. So thanks for giving back. Do you have a slight bias? Do you think we are taking out the low? I do have a slight bias for sure. I always have a bias. I think that you should always have a bias. No, hold on. Rewind. I always have a bias. I can't help it. But the more I'm aware of my bias, the more helpful that is for me, right? I think that's as honest as I could be with myself. There are times that I have a bias where it gets in the way. And again, I've talked about going back into March and this rally over here and my expectations. And it's even harder when you get it right because people over here were very fearful. This was as the invasion happened. But I had done some work. I knew that as the rate hike cycle begins, that more often than not, you do see a risk rally. It often takes price to new all-time highs. I was looking for this rally over here, and it was very sharp. I probably should have looked at how sharp it was. That would have been a beginning tell. But again, my bias and expectations were that it's going to carry further into May or June, I should say, but for a lot further. And after that, I did a lot of work on making sure I could lose my bias as much as possible. It's very, very important. But you always have a bias. And a recent bias that I have over here, right, is over here on Bitcoin and Ethereum. And the bias has been, even though I continue holding these short positions, and especially seeing these bullish wedges occurring, was that that we are going to break up with everyone actually very let's say confident that September is going to be such a bad month that, well, maybe it's not. And yeah, I think my bias is sufficiently that there's a strong possibility that the June low is in, whether you're talking about equity markets and or Bitcoin, and that's my bias. Now that didn't stop me from positioning short at all. That didn't stop me from positioning short, right? But at the same time, I have to be honest, the whole time I've been kind of rooting against my own positions. And you could hear me. How many times have I said, I don't know whether or not this trade's going to end up in profit or not? And to be honest, I don't really care. but that was coming from my bias, even though they're both going to end up as booking gains. Um, that's my bias, but I'm trading what's happening, and that's a perfect example of, look, you got to be honest and you're going to have a bias, but more importantly, as someone who's trading and participating in the markets, you got to be able to execute on both sides without bias. That's where the money's made. And maybe even this rolls over, right? I might have Ethereum exit here this morning. Bitcoin's not going to exit this morning, and then maybe by the end of the day, Bitcoin's not even extending anywhere yet. Maybe this rolls over, and then maybe Ethereum picks up another short trade by the end of this weekend, or not even the end of this weekend, by today or whenever. Right, I could very quickly see a resumption down, and I'll just pick up back short and get going. But I have a bias. My bias is not that we go ahead and move down and take out those lows. My bias is that that we're going to stay within this range until CPI. That's my bias. Or I shouldn't say that. We could break down before the CPI. I would be surprised to take out this area 3850 before the CPI print. But we do have the ECB. I don't know how the markets are going to receive all of a sudden the ECB having no choice but to change their policy drastically with more aggressive tightening, right? And that more, I don't know how the market's really going to price in. We got a bunch of problems. We got massive problems over in the EU. I don't know what's going to happen. My gut, my feeling is that it actually is going to give the opportunity, if we start seeing the ECB get more aggressive in their tightening, and then we see the FOMC softening their pace of their tightening, that might call for a bit of repricing in the dollar, in the DXY. Again, at a point in time when people have grown indignant to even entertaining other people's views, even people like Peter, Game of Trades, who has a long history of being on the right side of the markets. He navigated the 2020 reflation out of it very well, and continues to always provide really strong insight. And I think that, again, even if you are firmly bullish in the seemingly entrenched fundamentals causing this dollar strength, well, then you want to make sure more than ever to be looking at the opposing views of your beliefs. I personally think, because we could see a little bit of divergence in policy. And although the Fed will even be continuing to tightening more, and the swamp differential clearly faces the US dollar over the euro, it could cause a counter trend trade. It could cause a bit of repricing of what's currently priced into the market. I see descending and broadening wedges everywhere. Hunter, thanks for the blessing. Thanks for being here and being a part of it. Me too. I'm looking forward through this whole year together, how much we're going to grow, not only as a community, but individually, and looking forward to really doing my best to share my experience with you and to help everyone be able to view the markets in such a way that they could grow and learn to be able to conquer the markets, any market, whatever market they're looking at. And again, that largely comes from understanding that to do that, you have to give up the desire to be right all the time. That's not where or how you do it. It's all about managing risk. Yeah, there were a lot of really good lessons shared today. I think the biggest takeaway from today's lesson, today's session, which was appropriately named price action trading, was talking about those trendline breaks and talking about those false breakdowns. And we looked at a few of them. We looked at that on the DXY, right? We looked at that also on Bitcoin. This one was particularly interesting because it came off of a high impact news event, and you had the technicals and the fundamentals together. Every reason for that little bearish momentum to continue, And then 9.1 CPI print faded back up. That was really important. It was a good lesson. And also we were there and we did it in real time. We picked it up in real time. And I think more importantly, then when you saw the next CPI print come in at 8.5%, and people are wondering why the markets are rallying on an 8.5% CPI. No, they rallied on 9.1. And they were rallying because they were able to do that in real time. Say, you know what, that was a hot print. The next one most likely will not be as hot. We also had the DXY, the Bitcoin, and then we looked at here's another trend line break to the upside that was faded. So that's seemingly the lesson today, and that wasn't meant to be. But we are students of the market, and we're doing our best to make sure that we learn at all times. And it's that cumulative growth, that cumulative knowledge that's going to make you a giant. I really believe that. Boom, 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 boom. Brother, thanks for being here this morning. I hope you all have a wonderful, wonderful weekend, especially those that are celebrating with friends and family on Monday. That time together is precious and valued. And I think more than ever, a lot of us, after what happened during 2020 and in 2021, really value that more than ever. So again, not too much to read into today's price action, other than, you know, that you could point to it being a strong number, but that's just meeting expectations. That's not a strong number. We needed, as far as I understood it, a very hot number, like closer to 500K, in order to kind of change markets expectations of what was happening later in the month. Seems to me that we got bigger fish to fry. We got ECB coming up next week, and then we also have CPI the week after. So boom, 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 boom. Look, Bitcoin never closes. Bitcoin's trading 24 hours a day, 7 days a week. There's no question about it. And yeah, it's just a holiday in America, a bank holiday in America. Everyone, thanks for being here, sharing, right? These beautiful Friday vibes. Great session, valuable session. And that's what we're here to do. We're here to create and share value. Thanks for being a part of this. If you are new here, welcome. Please go ahead and make sure that you are connected. Hit the subscribe button. I know there's a lot to learn here, and it's a pleasure to work with all you. Have a beautiful, beautiful Friday, everyone. Even a better weekend. I'll see you all again on Tuesday. May God bless you, and thank you for being a blessing to me. All right, everyone. I'll talk to you later. Thank you, brother. Thank you so much.